Good evening. This is the Elliott wave update for the S&P 500 for Sunday, May 1st, 2022. I actually probably should call this the Eye of the Storm podcast, but I'm going to try and keep it not quite as long as I did over in the NASDAQ. NASDAQ got a little bit carried away, but there's some great trading information, not necessarily only applicable to the NASDAQ. It's also applicable to the S&P. So I'm going to try to keep this a little bit shorter, but go over some of the trading things and also just what the market is doing. But for a more in-depth conversation on some trading strategy and things of that nature, please go ahead and watch the NASDAQ as well. Okay, so here in the S&P, Friday came, Friday went. They tried to buy early, got caught up in themselves, and the market just absolutely plunged. Again, we've now gotten down several times and are testing the 4,100 area. Again, we've gotten down to 1675. That's today. And we got down on Friday, we got down to 18. So the analogy that 4,100 is strong support remains intact for right now. We have Fibonacci support at 14. So we got 14, 16, 18. Those are where we've gone. So you can think about that when it does finally break, and I believe that it will, it's going to slide. There's so much emphasis being put on the fact that this 4,100 is major support. And if it doesn't hold, boom. Well, I don't think it's going to hold, so we're going to get the boom. Now, what I do think can happen is we need to be breaking below 4,100. So not only going to break that support there, but then again at 4,100. And then we're going to get additional confirmation that the minute wave 3 is in force. So again, starting up here on the daily, no major changes to be making to the larger count. I'm continuing to count that we are in an intermediate third wave down. That'll consist of 5 waves of minor degree, of which we are in the minor third wave down. That'll consist of 5 waves of minute degree, of which we are in the minute third going down. So we're in minute 3 of minor 3 of intermediate 3, a 3 of 3 of 3. It should be pretty powerful. So I'm believing that right now we're just kind of still consolidating, waiting for something. And likely somebody bigger to come in and make the decision for us that, okay, we're going to go down, because you can see we've basically been sitting, doing a lot of back. Come on now. I am not sure, folks, but I will try to figure it out. I'm going to call everybody and their grandmother to say, why does it keep doing that? Let's just get over here. So you can see here we are consolidating. Guess what? Look at that. A little wedge, a little triangle happening right here. And the resolve will be like we get a little boost and then pop, boom. And that should, the thrust down should take us out. Now, here's the kicker. This is not going to be all of minute 3 because we're doing a 1, 2, 3, 4, and a 5. It's sub-minute wave 1. So I believe we are subdividing yet again, because remember that the relationship between a third wave is to its first wave. Even if this thing got down to 618, wave 3 being 0.618 times the length of wave 1, not in the realm of reality. What's in the realm of reality is a minimum of 100%, minimum. But even that doesn't really sit too well with me. So I'm looking for this minute 3 to get itself down into this zone. 38, 36 down to 36, 3,700. 91 to 3,700, right around in there. And that's just the minute 3. Then we get a rally, and then we get a minute 5, bringing us down. And that's just then the minor 3. And that all could end up right down in here. Now, eventually, I am looking for the S&P to get down on the intermediate degree, down to about 34 70 in that hood. Yeah, it's going to be below all that. 35 would be 200. So it's about 34, 80, 70, 80, somewhere in there. That would be for the intermediate degree, but it may end up being for the minor degree. So this all could get very extended, and I am looking for some power here. And in reality, it fits because we've got so much going on. And so many things can turn very quickly. And I mean, turn ugly very quickly. A big one is sitting over in Russia and Ukraine. It's just beyond comprehension as to what somebody's mind is thinking and how at any point they can justify what they're doing. But I don't know. I am trading. And so, but that is something that could escalate in the wrong direction. Not escalate to peace, escalate in the wrong direction, which is going to cause a real headache to the global economies, et cetera, et cetera. We have the FOMC meeting next week. We should know, I believe on Wednesday, we will have our decision. I think that's when the press conference is and when the meeting concludes. I believe it starts on Tuesday, ends on Wednesday. So starts on Tuesday, the 3rd, ends on the 4th. We'll see. But that's the one where everyone's now resting on, oh, if they come in less than 50, then we rally. Okay. What does reality tell me? Reality tells me that inflation is really taking a nip in the butt right out of us. And that's not yielding to anything right now. Things are still kind of getting pretty raw and pretty nasty. Bonds are back below. The 30-year bond is back below 140. So we got some stuff just really angling down. They want to sit here and play with the prices and hold it in a consolidating point. Okay, that's fine. My take is that we go down. My take is that the Elliott is going to prove stronger, and the reasons for the downside are going to prove more. The reality is going to drop in. And so we'll get ourselves all the way down below all of this. Now, for tomorrow, I think very much that this bounce will probably complete before we get back into the market tomorrow morning. This is a little triangle here, boom, boom, boom. We get a pop above the triangle, then it's going to slide, and it should drive it down to the apex of the triangle right now. That's it. 47.50 down to 41.16. I believe we break 14.5. I believe we break 4,100. Next support, if we can push through there, would be at 40.69. But we have some over here at, what are you telling me? Give me that. Where is this price? Well, that price is 41.36, but I think this is 41.01. And that we should continue to give me this midpoint and tell me what it is again. 41.31 actually goes lower. We already are below that point. And then we start to break down below 4,100. We get down to like 40.93. We get down closer to 40.69, 40.70. That then completes a smaller 5 waves down. Then we're going to get a bounce. And I believe right off the bat, we're going to be looking at the moving averages. You're going to be looking at the 8 and then the 20 when this finishes and when it bottoms. If it breaks below 4,100 and then bounces very quickly, which it could do, understand it's just a small wave too. It's just a small bounce, and that the larger portion of the decline should come in. And I would suspect that it does pretty much like we did here. You try to buy it up, good. And then the sellers come in and they take over. Okay, so for tomorrow, upside should be limited. I think we might stand a chance we get to 41.51. We have resistance up at 41.60-ish. We have the 20 at 41.85 and the 50 at 42.13. I do not think that the market will power itself up to 4,200. Stranger things have happened, which is why I'm discussing it. but I don't particularly think that the buyers are going to be able to muster against the selling, get it up that high. Doesn't mean they won't try, but I don't think they make it. So I think we have plenty of resistance between where we are and where it can possibly go. Then the downside kicks in again. I'm looking for that break below 4,100. How deep it gets, I think it should this time get below 40.90 and start maybe working its way down to 40.80, 40.70. We have that support right there at that 40.70 level. And then bounce again. And a little bit larger. So from 40.70, we bounce back above 4,100. And that'll make them all happy and relaxed. But then again, we're going into, FOMC, et cetera, April job numbers at the end of the week, et cetera. All of the major earnings reports are now out. So I think we still have some left. Of course, we have Twitter. We've got some other companies that still are left to report, and they'll be coming out this first week of May. So again, tomorrow, I believe we're going to hold in here. Now, depending on what happens overnight, we still have to get through the Asian markets and the European markets. So we could be down there and back up by the time we get back online tomorrow morning for the opening. But I now giving parameters to the upside, parameters to the downside. We get a stop and then we get another rally. Once that secondary rally pops in, then you're going to be able to run Fibonacci retracements from here, 4303, down to wherever this little 5 waves completes. I'm thinking that possibly gets down to 40.70, and it could go lower by all means. This is just kind of where support and the possibility. If it continues to go, it's still working its way lower in that third wave. So the overriding power is down. The overriding trend is down. And these small rallies are just that, small. And they're bounces, they're corrective, not necessarily indicating that the market is reverting to more bullish posture. I think it's just consolidation, profit taking, and then we continue lower. All right, I'm going to end it right there. We'll keep this one short. Again, the NASDAQ delves quite a bit deeper into Elliott and trading and how that all comes into play. So our next update here will be on Monday, May the 2nd.